Hey there, this is Darren, founder at Denzity. Welcome to Denzity Insights, where we interview real estate experts for their expertise and opinions and help you to learn more about all things real estate. This is the third of the three-part episode we filmed with three different experts covering the newest 2021 updates of the UK real estate market. Learn more about obtaining a mortgage in the UK, tips on doing taxes, and what to be aware of when investing in UK properties. Today's episode is all about UK investment taxes. We interview Gordon Franks at Soteria Trusts, a company providing a range of trust and fiduciary solutions to help clients manage, grow, and protect their valuable assets within their lifetime and create a tax-efficient legacy for their beneficiaries. And Kenneth Yeung at China Consortium, a global business advisory and accountancy practice with offices in Hong Kong, China, and the UK. They provide traditional bookkeeping, auditing, taxation, and company secretarial services to the Chinese communities in London and southeast of England. Through this episode, you can get a detailed explanation of what types of taxes you need to pay when investing in the UK properties and what you should be aware of. This is going to be amazing for those of you who might be interested in investing in the UK. Please share this video with anyone who might be interested, and we hope you enjoy the show. As always, you can find everything we mentioned in this episode in the show notes, including our thoughts, more about the guests, and all the tips and tricks. If you haven't yet, hit the subscribe button like you mean it to get our regular updates. Now, take a deep breath and buckle up for the show. Hope you enjoy. So Kenneth, on to the show.
Thank you.
We always talked about UK property, and property cannot get away from tax.
Right.
So what type of tax do Hong Kong investors need to pay when investing in UK properties?
Right. There are many types of taxes in the UK, but the ones which relate to, I would say, residential properties in the UK would be income tax, corporation tax, capital gain tax, stamp duty, land tax, and there are many other taxes, but the most important one is what we call the annual tax on enveloped dwellings.
So how much would those tax cost?
Let me just explain briefly what each type of tax kind of relate to. For income tax, each individual who receives rental income would need to pay, say, a standard rate of 20%. However, if the total amount exceeds 50,000, then the tax rate would become 40%. Also, if that individual receives even more income, i.e. 150,000, the tax rate would increase to 45%. So that's basically what income tax is all about. Then corporation tax. Corporation tax is when a company which owns a property and the company receives rental income, then the company would need to pay corporation tax. The corporation tax rate at this moment is 19%. And also if the company sells the properties and make some capital gains, those gains are also subject to 19%. However, there are some changes in the future because of the recent budget, but I'll give you more details kind of later on. The third type of tax in the UK, which relates to UK residential properties, would be capital gains tax. The tax rate at this moment for individuals would be 18% if that individual is paying basic rate tax. But if the individual is paying higher rate tax, then the capital gain tax rate would become 28%. For companies, the capital gain tax rate is only 19%. So this is what we call capital gain tax. The method to calculate capital gains would be to use the proceeds less whatever base cost you incur when you acquire the property. and the difference would be subject to capital gain tax. The fourth types of tax is what we call the stamp duty land tax, which is a transaction tax payable by the buyers when they acquire the properties. At this moment, the normal rates range from 2% to 12%, depending on the value of the property. Give you an example. If the property is less than 150,000, you don't pay any tax at all. But anything about 150,000, you pay 2%, 5%, and so on. At this moment, again, there is what we call a stamp duty holiday. Stamp duty holiday actually expired on the 31st of March this year, 2021. For the first 500,000, you don't pay any stamp duty land tax. The stamp duty land tax holiday has actually extended to 30th September 2021. But the amount, the exempt amount has been reduced from 500,000 to 250,000 only. And lastly, I mentioned this annual tax on enveloped dwellings. What it means is that if you use a company owning a property and you stay in the property, then you pay an annual tax. That tax would range from 3,700 a year to probably something like 236,000. It is a very, the amount is very high. If you're unfortunate enough to pay the tax, sometimes it's actually up to 1% of the value of the property.
Is there any way of minimizing taxes?
Yes, for income tax, you can claim your personal allowances, which can be up to something like 12,300. If you own the property, the residential property yourself, you can also consider claiming the capital gain tax annual allowance, which is again at about 12,000. On other taxes, for instance, ATED, the annual tax on enveloped dwelling. If the company owns the property for the purposes of letting out the properties, you don't need to pay the annual tax on enveloped dwellings as long as you make a claim. But make sure that the claim is submitted on time, otherwise the penalty would be very heavy. Also, SDLT, if you use a company to pay again or to own the property, the normal SDLT is 15%. But again, if you claim that the company is buying the property for letting purposes, you can actually pay the normal stamp duty rate instead of 15%. If you own the property yourself, then when you sell your property, there are some reliefs which you can consider. If you use your property yourself, you can consider what we call the private resident relief. If you let out your property, you can claim the letting relief. The letting relief is actually up to 40,000. There are also mortgage interest, which would be available for both individuals and companies. Unfortunately, for individuals, you can only claim the interest for your basic tax rate. So if you are paying 40%, your deduction would only be limited to 20%, i.e. your basic rate. You need to keep very, very good records of your expenses, which when you do your tax return, you can use those expenses to set against your rental income. Again, there are other ways of reducing your taxes, i.e. whether you're using a company or you're using an individual to own the property. Of course, there are pros and cons for each method. For companies, you only pay your tax at 19%, whereas for individuals, you can pay up to 45%.
So is there any upcoming news with tax changes or adjustments for UK properties?
There are primarily two changes which would affect the owners of residential properties in the UK. Just now I mentioned the fact that you may use companies to own residential properties because companies only pay a lower tax rate, 19%, versus individuals paying 45%. However, there would be changes for companies' tax rates. From April 2023 onwards, the company tax rate would increase to 25% if the profit is in excess of 250,000. And therefore, if you have some high rental valued properties and you have let's say if you have a portfolio of properties and you received income in excess of 250,000, which would mean you are paying something like 25% tax rate. So that's one change. The second change is I actually mentioned again earlier that for SDLT, there is at this moment a SDLT holiday, which you do not pay SDLT if your transaction value, if your property value is below 500,000. But that 500,000 would be reduced to 250,000 as from 1st of April to 2021, and the holiday, the SDLT holiday, would be extended until the 30th of September this year. So these are the two main changes which everybody should be aware of. There's also one more what I call implementation, which everybody should be aware of. The legislation is already there, but the legislation would take effect from 1st of April this year. For foreign companies or individuals who are not tax residents in the UK would need to pay an extra 2% stamp duty when they acquire residential properties.
So Kenneth, for the people who want to reach out to you to have like a one-on-one consultation, what's the best way for them to talk to you more about this?
Of course, I mean, anybody who would like to have a one-to-one tax consultation, I can be contacted on my mobile and also on my direct line. The way we will do our one-to-one consultation is that we will give you in general what taxes, UK taxes would relate to you. We'll analyze your circumstances, and then you can, in the meeting, you can actually ask any question you wish. Afterwards, if you want a written report, we can also write to you and list out everything that we discussed in the meeting.
So Gordon, if anyone wants to reach out to you to talk more about your service, what's the best way for them to reach out to you?
Okay, the best way to contact me is either via email, I think my details are below this video, or via phone or WhatsApp, which is +852 6407 1102.
Well, thanks for your time today.
No worries, thank you.
Thanks for watching. You know, majority of you don't stick around this far. So we're flattered and truly appreciate your attention. To return the favor, let us tell you our thought on this episode. This episode is very informative, and I think it thoroughly covered most of the essentials on taxes for UK properties investors. It's a lot of work to do yourself, and it would be best to engage with a tax expert to assist you. If you have any suggestions on any topics or questions about the UK market, please feel free to comment. Also, feel free to direct any questions to Kenneth and Gordon about tax-related matters. We have a more detailed version of our thoughts in the show note. Beside that, you can find more about the guests and all the tips and tricks we have mentioned in the show note too. Well, what do you think? Let us know in the comment section. Fun fact, do you know that more than 85% of you have subscribed to this show yet? Subscribe now to keep getting good stuff from us. Thanks for watching. What do you think of this episode? Please let us know in the comment below, and be sure to hit the subscribe button to keep in touch with us for upcoming videos. But before we go, I want to give a big shout out to Patina Design Lab. They're the one who help us in making our brand, our direction, as well as these videos. They are a strategic design consultancy firm to help businesses with a wide range of design services, from industrial design, branding, graphic design, art direction, content creation, and many more. They are a very talented bunch, and I urge you to check out their website for their work. That's all for today, and see you next time. Cheers.